Alex Kenjeev is the president of O'Leary Ventures and joins us from our downtown Toronto studio this evening. Thanks for joining us. So how worried should Canadians be about today's turbulence on the markets?
Probably not a good idea to worry, but definitely a good idea to try and understand what's going on here. What we're seeing is the incredible importance of China to the global economy, and we're also seeing that a little bit of bad data from China, investors are looking at that data and combining it with several years now of central banks around the world trying to support global growth with easy money and policies of that sort. And I think investors are stepping back and asking whether that's all working.
So the volatility in North America directly linked to the market crash in China?
Absolutely. This is all about China, and as it should be. This really highlights the importance of China to the global economy. Just consider this. Last year, Chinese output accounted for about 15% of GDP, and yet it was responsible for almost half of global growth. So it really is true that what's bad for the Chinese economy is bad for everyone's economy.
Well, you were saying, try not to worry, but how do you think investors should react to this?
It's important not to overreact. It's easy to look at market returns over the course of a bad day like today or even a bad week and get nervous. But especially when it comes to equity markets, what matters is the long-run scenario, the long-term perspective. So really, Canadians should step back and ask themselves, are they doing okay on a risk-adjusted basis over the many years and decades that they're in the market? And most of the time, the answer is yes.
What do you think will happen in China over the next few weeks?
It's going to be an interesting standoff between the central government's various attempts to try and prop up the market against market forces that are trying to step back and say, wait a minute, maybe some of these equities are overpriced. Very difficult to predict, and as always, I would say it's important not to try and time the market, but instead keep a cool head and try and be rational.
Oil prices continue to slide to a 6-year low today. Other commodities are slumping as well. Why are commodity markets being affected so badly?
It's all part of the same loop of data. The data that's coming out of China saying that the central government doesn't believe that the economic growth is going to be where we once believed. That's the same data that's driving commodities traders to say, wait a second, maybe copper, oil, and all these other commodities aren't going to be worth what we thought they were because demand isn't going to be there.
Where does the weak Canadian dollar come into play in all of this, or does it?
It does, absolutely, and it's kind of an unfortunate aspect of this global slowdown from the Canadian perspective. If we were sitting here on the south side of the U.S. border, I could look at you and say, hey, the good news is U.S. dollar's up, so at least all of our imports are cheaper. It's great for consumers, right? But unfortunately, the Canadian dollar is so closely linked to commodities that it's basically a double punch that's hurting Canadian consumers at the same time as hurting Canadian investors.
All right, Alex Kenjeev, president of O'Leary Funds, we thank you so much.